Even amidst global market uncertainty, Bitcoin is showing incredible resilience and pushing up as markets seem to be melting down around the world. Is it finally Bitcoin's moment to decorrelate and start showing how much of a hedge it is against all of this insanity? What doesn't kill Bitcoin makes it stronger. And today we've got the legend, the man, the myth, John Deaton here to talk about all of that and more alongside myself, Andrew, and Tillman, who actually decided to show up today. He actually decided to show up. You guys, it's going to blow your mind. 4 men, 1 screen. Let's go.
Let's go.
What is up, everybody? I'm Scott Melker, also known as the Wolf of All Streets. Before we get started, please subscribe to the channel and hit that like button. Now I'm going to bring on 3 glorious beards and shiny heads to go with my non-glorious beard and hair. I told you guys I wanted to get a skull cap and like just some sort of like maybe some yarn. I could grow the beard. I could do it, but it's pretty amazing. Y'all look great. Here we are, as I said, Bitcoin showing tremendous strength here. This was coming not even from me, but obviously from Wintermute here. Bitcoin shows growing strength during market downturn. Our friend Matt Hogan saying the same thing from Bitwise. Bitcoin acting notably different from prior market pullbacks. Wants to go higher if macro obstacles are removed. John, you've been here a while. You got the bulk of your net worth in Bitcoin. What do you make of how it's acting with how the governments are acting?
It's about time.
Mm-hmm.
You know, I can't say I'm an OG, you know, like some of the people on the panel probably, but I've been with Bitcoin and crypto since late 2016. So we've been keep hearing about where it's not going to be tied to the NASDAQ. It's not going to be tied, you know, to tech stocks. And maybe we're seeing it break away and be the independent asset that we all believe it is.
Yeah, I mean, we're almost back to 86,000 here. Andrew, Tillman, what do you guys make of it? I'm going to go to Tillman first. I'm not going to let you talk, Andrew, because I've got Tillman here, and I don't know if he's going to just leave.
I was here last week. What do you? I mean, 2 weeks in a row. No, I think it depends on what time frame you look at. With any assets, you can correlate values, and I think that John's right. I think this is traditionally we've always looked at Bitcoin as a safe haven against all of the mess that traditionally finds its way into all the traditional markets. I think that if you look at certain periods of time, though, there is correlation. You see the price moving together. And I think that especially when you find 8 times the volume of dollars being traded in the futures market against BTC than even in the spot price at some points in time, that's going to happen. Like, they can control the price with paper essentially at this point. And you can make price do what you want for very short periods of time, but over the long haul, the math wins. You can't beat Bitcoin. That's what's so great about it, is it's impervious to political opinion. It really has one metric that I follow: adoption rate. And if adoption rate goes up, price goes up. Those are the 2 strongest correlated values as it relates to a power law in Bitcoin that you can get. And interesting, Bitwise came out with an article this week that said that corporations, publicly traded corporations, up 16% in terms of them adding it to their balance sheet in just that last quarter, Q1. So, I mean, adoption rates are not only on the rise from a user's perspective, but then if you quantify what those users really look like, they're corporations and sovereign nations and states and pension funds, and they're big buyers compared to what we've been talking about in the last 4 cycles. It's the game has changed. The pocketbooks are much deeper. Wall Street's in play, and new mechanisms and new tools and new products are being created every single day, as we've seen in terms of kind of these now more leveraged products on the ETF side.
Now you can go, Andrew, because Tillman.
Well, I agree with both, but I will say in terms of price action, we're up 13% in the last 6 days. So, moving up faster or higher on a percentage basis than the broader markets. As I've said for the past 2 weeks, everybody's melted down about tariff talk, and we've basically gone nowhere in the markets. We've gyrated a bit, and people get all hot and bothered about it. People, put their eyes on the Sunday futures open. And so, 2 Sundays ago, Sunday futures are down by 5.5%. This past Sunday futures were up 3 whatever percent. It all kind of evens itself out. The market, it continues to be dynamic across traditional markets, but Bitcoin, as has been the case so many times, is more dynamic. So oftentimes, we get, as long-termers in this space and people that hold Bitcoin, they can get bored with price action, right? Because they're used to moments, and they happen 10 to 12 times a year, where there are God candle-like moments. So you get bored with price. Well, if you got bored with price down at 75, 76, you missed out on, a 13% move to the upside. So don't get bored with price. Bitcoin is going to do what it's supposed to do. And Tillman is right. When you look at adoption rate, and we're in a sort of a renaissance moment when it comes to adoption. Corporations taking on more Bitcoin onto their balance sheet. And it's one thing to talk about corporations that make huge headlines, right? But it's also another thing to look at smaller corporations that don't make huge headlines. They're also adding Bitcoin to their balance sheet, and they're doing it in 100 Bitcoin, 200 Bitcoin, 300 Bitcoin, whatever the number happens to be. And so that 16% uptick on a quarterly basis, if that just does another 10 and another 10 and another 10 over the next 3 quarters, those are huge numbers, right? Those are really, really big numbers. And Bitwise has said, Matt specifically has said, that Bitcoin on corporate balance sheets is not just a trend, it's a mega trend. And so we're going to continue to see that happen. And certainly Bitwise, the conversations that they have are on the cutting edge of all of that.
Well, and I hate to throw one more thing in there real quick, is that, in the past, we've seen Bitcoin be the most volatile asset when volatility hits the market. Well, that's not the case anymore. Like Bitcoin,
treasuries are like more volatile than Bitcoin.
We're seeing swings in the real markets that are much more wild. I mean, what's happened in the NASDAQ just over the last couple of weeks, if you had leverage on either side, you're a total extinction event. You're wiped out. Too big of moves.
Scott, how could anyone not be bullish? I mean, I just back up for a minute. You have the president of the United States of America has created a Bitcoin strategic reserve, and he's instructed Scott Bessent, the U.S. Treasury Secretary, a Bitcoiner, and Howard Lutnick, a Bitcoiner who has exposure to Tether up to 5%, Cantor Fitzgerald, to acquire more Bitcoin in a budget neutral manner. And budget neutral matters. Now you have Bo Hines out there, who's the executive director of the Crypto Council. People are talking about Bitcoin bonds. They're talking about selling gold to buy Bitcoin. They're talking about all these different new tariffs that are being paid acquiring Bitcoin. I just don't see how anyone could not be bullish. I'm almost a little scared because there is no argument not to be bullish, right? Because if you look at a huge event that could scare the market, we just experienced it.
Yeah.
And what did Andrew just say? We're back to where we were,
Yeah.
That event.
I mean, stocks aren't higher. Stocks aren't higher than where we were before Liberation Day, but Bitcoin's trading $2,000 or $3,000 higher than it was at that point, pushing up much higher. And to your point, it's all just a function of uncertainty in the world that hasn't sent Bitcoin. But I mean, you're right. I know it wasn't about Bitcoin, but, we have Bukele meeting with Trump yesterday, the 2 Bitcoin presidents, in one room for the first time. And you basically just echoed the point that Matt Hogan made, which is when there's any level of certainty or clarity coming, Bitcoin should just absolutely fly. I mean, tell you one guy who's definitely not scared. strategy. Obviously, Michael Saylor bought 285 million more. I mean,
No.
John, like for you personally, right? I know you've said publicly many times the bulk of your net worth is in Bitcoin. You keep buying, you keep adding, you keep going Michael Saylor.
I mean, not to that extent, of course.
Oh,
but
really?
Listen, I mean, yes, Bitcoin hit the 70s. I bought in the low 80s as well, and so I just don't see. Again, my concern is, what am I missing? Because I can't come up with an argument that isn't bullish. We can have these temporary setbacks, and you can't think of a more major setback than what we just experienced. And Bitcoin did resilient. The whole market, I know we're going to talk about XRP later, but like, that's shocking how well that's held up as well. And so I think that we're seeing this asset class really come into its own right now.
Yeah, I think it's just a situation where you got to be selective and smart. Like, we have the complete bullshit, obviously, on the side of the memes, but in the middle, you're going to have to choose wisely as to things that are actually going to do something and progress. And XRP, you can't deny, like, have been pushing hard.
There are some statistics that, we should talk about, because again, over the past 2 weeks, there's been this, especially in TradFi markets, there's been this borderline hysteria. Now, I don't want to go to the route of, people in engagement farming or anything like that. But again, there's been this, hysteria associated with futures moving here and markets are going here and what's going to happen. Year to date, the S&P is down 7.8%. In 2023, it was up 24%. In 2024, it was up 25%. So effectively, the S&P over the past 3 years is up collectively 43% right now. Okay, so it's extraordinary to see people try and compare this stuff to whether it's the COVID crash or the great financial crisis. It's nowhere near any of that stuff. So if you can keep your head and keep it in the right place and make meaningful, well-reasoned decisions associated with an asset like Bitcoin, and when it dips, because it'll dip again, hit 86 or whatever today, or maybe a little higher, but it'll dip again, 83, 82, 81, 70, whatever it does, make a well-reasoned choice to add to Bitcoin at that point, or any other asset that you find compelling and think has long-term viability.
Well, let's dissect what you just said, because I think that if you look at it as an equation of risk, right? If you're a person that does not own any Bitcoin, I would make the argument you have more risk in not owning Bitcoin than any risk you could have in your price entry of owning Bitcoin. So you've gotten to a macroeconomic place globally where inflation, whether you want to call it hyperinflation, whether you think we're on the edge of hyperinflation, we know the printing presses are going to continue. We know $5 trillion is coming down the pike. We know the Republicans and the Democrats are going to bipartisanly agree upon that. $5 trillion is going to move the needle. It has to. It has to go somewhere. And so when you go, okay, well, where is it going to go? Well, let's talk about what Ripple has done. I think this is finally the season of utility. We said that like 2 bull runs ago. Oh yeah, this finally we're going to have utility, and we thought the smart contract mechanisms with Ethereum were going to bring that, but then we've reached that glass ceiling that Ethereum has. But this time it feels different because the regulatory environment is so clear for big institutions to put a lot of money into building the arena, if you will, that build it and they will come. So you look at what BlackRock and Citadel are doing in Texas to build the first digital stock exchange. Well, Ripple just did that. They now have that. And, that's a unique function that we used to have. And then in the last administration, because of regulatory wins, we lost, which was a very unique bridge. And the bridge was this. And TradeStation had this because I was touting it. I loved this function, which was you could trade traditional assets, you could trade crypto assets, you could move cash between those assets, and you could take crypto off into cold storage anytime you want it. That functionality has left our ecosystem, and it's back now. And that is something to be celebrated, because that's the merge of traditional markets and crypto markets. Kraken's not right. They're right behind them. I can almost guarantee Kraken is going to make, they're going to do this too. I promise. I don't promise, but I really believe, speculate. And so, you look at, like, to John's point, the overarching winds now are tailwinds. Everything's getting pushed digital. And what does that mean? It means that a lot of that new printed money is going to be pushed into liquidity, into this new ecosystem that's being created. And then if you just start to even back up a little bit more and say, okay, we're a bunch of old guys talking about this. What's the 20-year-olds think about this industry? Like, this is standard for them. They're not thinking this is cutting edge. They were born in the darkness. They love, like, that was a reference for you, Andrew, by the way. They love the fact that we're moving digital, and they welcome that change, right? And so it's, I just don't see how you don't see that this is going to grow. And kudos to Ripple, because that is true utility. And it's shocking that they've been able to overcome, in my opinion, the hurdle of, oh no, international settlements are probably going to be done with stable coins, which weren't around when we created this thesis. How do we adopt? And I will say this, in history, if you look at the companies that reach the tallest heights, that are the biggest and the broadest, they're able to adapt. They literally can change on a dime and reinvent themselves and find market fit. And it's always done through utility. So the fact that, this what is it called? Hidden Road. Hidden Road did $3 trillion of transactions. That's not small. They've got hedge funds playing in this exchange. And so now you have a stable coin created by Ripple that's going to be literally the ecosystem itself, the liquidity and the collateral by which you can borrow against, you can trade on leverage against, like all of the fun things that traditional markets have. Now you can go do this in the crypto space. And this is just the tip of the iceberg as far as I'm concerned.
Scott, let me just comment a couple of things. One, whether you're Republican or a Democrat, what Tillman said is true. There's one path, and that one path leads to the federal money printing, leads to printing of money, 100%. And as far as this Ripple Hidden Road acquisition, I was watching some Bitcoin maxis. It's got Bitcoin maxis saying, oh shit, I guess XRP and Ripple are going to be here for the long term. There's no doubt
like
about
it or not. And that's because of you. Let's be honest.
Well, I don't know.
I don't know, man. If you don't take on that case pro bono and win, then we're having wildly different conversations about XRP specifically, and certainly about anything not called Bitcoin that's in this industry.
Hey, listen, and I owe a lot to the XRP folks and the XRP Army, because I did take it pro bono, but I probably should recalculate my net worth. When I ran for Senate, I said 80% was in Bitcoin, and that's true. And I've never sold a Bitcoin since, but XRP has outperformed. And so, I have a substantial holding in XRP. So it may be down to 65% Bitcoin, and XRP is creeped up, because it's,
this is like Ripple has crazy money, a $1.25 billion deal to buy this. I mean, these guys are slinging it. I've said, sorry to interrupt, but I've said, and I got, criticized for being like a fanboy or something for Brad Garlinghouse. And I said, I think he's the best CEO in crypto, to navigate that case, to navigate the boot of the government on his company's neck, the way he did, and these acquisitions that he's made. I don't see an argument. You could argue for Brian Armstrong, you could argue for others, but I think the man deserves his credit. And by the way, you can even say that if you don't like XRP, you can just call balls and strikes when it's fair and say, like, look at the situation these guys were in, and look at the situation they're in now.
Yeah, there had to be there had to be sort of a teaming of in the crypto space to take on the SEC and then the government at large. I mean, again, because the world of crypto Twitter has the ability to focus on something for about 9 seconds. We've forgotten that 12 months ago, crypto was borderline outlawed, other than Bitcoin ETFs and Ethereum ETFs in the United States. Like that's where we were headed. And so now we're in this world where it's wide open spaces. Nearly every case that existed that the SEC was pursuing has been dismissed and moved on from. We're in this new world. In that new world, a trail was blazed by John, by Ripple, by Coinbase, and their legal team as well. Those two forces, had the ability and, frankly, the truth of the way that legal battles are fought. They had the capital to be able to fight the size and scale of the government, and specifically the SEC. I think it'd be interesting to hear John talk about the difference between talking to or listening to or being involved with in any way, shape, or form regulatory bodies then versus regulatory bodies now. I think that would be really interesting to see, to listen to.
Yeah, well, listen, I mean, let's just back up, 2.5, 3 years with the FTX debacle and the doom and gloom of the industry. You could go to an event like Consensus and it was palpable. Like, people were just questioning, developers questioning whether they had given up, their 9 to 5 and they were part of a team, whether they had made the right move, whether they had sacrificed the future of their families because this industry was going to basically be outlawed by the U.S. government and everything was going to go offshore. You go from that extreme, and yes, I'm not a fan of the meme coins and the Trump coin and all that stuff. But like Scott said, you get past that and you look at what's happening, and you just couldn't write this. If we all went back 3 years ago and said, John, Andrew, Scott, I want you to come up with the most bullish, regulatory posture you could imagine, John Deaton would have said, I just want him to be neutral, right? Just take your boot off the neck of the industry.
Right.
Just be neutral. I would have never said the president of the United States tweeted about XRP, Solana, and Cardano. I would have never imagined that. I would have never imagined the SEC agreeing to give back money to Ripple. Right? Ripple put $125 million into escrow, and they get $75 million back. So the United States government said, here, take $75 million back in XRP or whatever. And that's just incredible. That's why I said that there's times I wake up and I think, am I missing something? Because I think that if you are a financial advisor and you are not advising your clients to have some exposure to what Tillman said, it is now, if you have no exposure to this asset class, if you have nothing to Bitcoin or any of the other assets, then you are being stupid, in my opinion, and you are being in way of a more risky position. So how do you not say 1 to 5%? You have Larry Fink talking about nonstop about the tokenization of real world assets, and a lot of people don't know this. And it's why I always said that XRP and the XRP ledger would be around long term. The XRP ledger had the first DEX ever in the world, embedded into the ledger. They were actually the first ledger you could tokenize assets. And so I just think it's an incredible time. We've got a government now that is basically telling us that you're stupid if you don't allocate some of your wealth to this asset class.
Well, smart money is here, and you can't ignore it. It's like, even when I first heard about crypto, somebody explained to me, and this is, early days, 2014-ish, they said it's like having the ability to send secure money in an email. And when they open the email, the money's in their pocket. It's like that. And so sending digital money only makes sense. Like it removes a ton of friction from a ton of industries. The risk that I see, John, to answer your question from my vantage point, is that this cycle is going to be different. And I believe that this cycle is going to be all about, what are you actually doing for the world? What utility have you found? And I think the world has identified Bitcoin's utility as a store of value, hedge against inflation, insurance policy against fiat, if you will. I think the Bitcoin is the only option for that from where I sit. And then I think you have all the rest. And all the rest are trying to define themselves against utility. And the ones that are suffering the most, like Ethereum, it's because their utility is being called into question. There are issues with scalability in the ecosystem. Solana, there are issues with uptime, like with reliability in the ecosystem. There's all these things that now, because we've gone through cycles of using the tech, Ethereum, the ICO crazed, we used that, up and down the street 6 ways to Sunday. We know what Ethereum does under stress. Same thing with Solana with the meme coin phase. Like those kind of bleeding edge peripheral markets test the tech in a lot of cases through these cycles, and we get to find out what really, like, if we're going to put real world assets on a blockchain, which one? Like I consider myself to be somewhat of an expert in the tech. I love it and I study it all the time, and I still couldn't tell you. If you put a gun to my head and said which one's going to do the best under stress and be the most reliable, well, it would be Avalanche from a tech perspective, but it doesn't have the depth of liquidity. So you're giving up something regardless of who you choose, unless the government comes out and says, or like Ripple did, this is going to be the way we provide depth of liquidity. We're backing it with our own token. And if you have the money to do that, like Ripple, I think they've got $125 billion of value there. I mean, they're going to be pushing money into developing utility on the back of their ecosystem. And XRP was the first token I ever saw this type of utility actually being used for. And John, I don't know if you remember this, but do you remember XRP Tip Bot?
Of course I do. Yeah, absolutely.
Yeah, Witzel Wind, I think, is the guy that created that. And it was, no one heard about it other than guys who really loved XRP. But it was a way where if I liked a tweet that John put out, I could literally just go at his handle and then XRP and the amount, and it would send the XRP out of my wallet automatically over the Twitter network to a holding account if John didn't have an XRP Tipbot account up and running. And as soon as he logged in and essentially verified through logging in with his Twitter handle that was him, boom, the money was there waiting for him, even if he didn't have an account set up. And if he did have an account set up, that XRP was in his account instantly. That was the first time I saw social media money transfer capabilities. That's coming. That is here. It already was here. How long ago was that? 5 years ago that he did that? I mean,
yeah, listen, a lot of people feel that the lawsuit, it suppressed all that momentum that XRP, Ripple, or whatever you want to call them, as far as the company or the token itself, that suppression, because that was a way ahead of its time. And
way ahead.
What you just described was internet of value. It was Chris Larson in 2013, co-founder of Ripple, is the one who coined that phrase. It was associated with the XRP ledger and Ripple. So 100%, man. It's it's hard not to be bullish, man. I keep telling you, I literally keep trying to have these conversations. One risk I think we saw with Bitcoin is that the more Wall Street gets involved, the more leverage gets involved. And do you guys think even the dip that Bitcoin experienced were professionals selling it to meet their margin calls?
No, yeah, I think that no, I don't think to necessarily meet a margin call. I think it was just a bunch of people panicking on Sunday who couldn't sell anything else.
Okay,
because we're back above. That's my opinion. I would love Andrews. I know you're about to jump in, but like when we got Liberation Day, Bitcoin traded flat Thursday and Friday, and that's when markets dumped hard. And then you get to the weekend, and when everybody checks their portfolio, your average dentist or, gets home is like, what? And they just sell what they can in advance of the Monday panic, right? You have Kramer on TV talking about Black Monday.
Scott's spot on about that. You didn't have anything else to sell, right? So 99% of average investors aren't also trading futures actively on Sunday nights. They hold spot positions in Bitcoin on an exchange somewhere, and that's an asset that they can move around and potentially liquidate if they think, if they're listening to Kramer, like some of them do, and there's a Black Monday. By the way, awesome that he said we're going to have a Black Monday, because anytime Kramer says anything, you just do the opposite and you're in a good spot.
Should have gotten long.
Right. So it's it's interesting, very, very interesting times where we're being able to evaluate Bitcoin as a store of value, Bitcoin as a hedge against not only inflation, but Bitcoin as a, is it an uncorrelated asset? Has it consciously uncoupled from the broader markets and the NASDAQ and risk assets? Has it done that? To some extent, a little bit, yes, but overall, and Jeff Park at Bitwise has made this point over the last month. Bitcoin is anywhere between 9x to 25x more volatile than the S&P. So there should be an expectation when there's a move higher, Bitcoin's going to move faster and higher. There's a move lower, Bitcoin's going to move faster and lower. We've seen some of that, just like in the last 6 days with Bitcoin up 13+%. Broader markets have moved a little bit higher, but again, not materially higher. So, taking that volatility, harnessing that volatility, and being able to profit and benefit from it in some way is, to some extent, why we're here talking about what it is that we talk about and talking about Arch Public. Harnessing that volatility is something that over time, not only spot Bitcoin, but then options and swaps and, we're at some point we'll get bit bonds and they'll trade, and how are they going to trade? All of that is going to have additional volatility associated with Bitcoin as an asset. How do we harvest returns from that in a meaningful and somewhat thoughtful way? That's all. A lot of it's here, and a lot of it's coming over time.
Yeah, two quick things that we had, just these stories. Analysts claim two factors position XRP ahead of other assets for spot ETF approval by the SEC. So obviously we know that other ETFs are coming, right?
Yes.
Whether it's going to be Solana, Doge, or XRP is hard to tell in the short term, but a couple of reasons they think this might be it. And that's because we got the leverage product launched last week. So there's some sort of precedent for approvals, 2x leverage XRP. And that's one of the major ones in market dynamics in general. So the next story, though, kind of a surprise to a lot of people. And John, I want to kind of ask you about this. SEC delays crypto ETF staking and in-kind redemption decisions as agency mulls long-term crypto regulatory strategy. So obviously we've gotten nothing but good news out of the SEC over the past, 3 months as they've transitioned out of the regulation by enforcement and have started approving new things. But a lot of people still want to see staking in the Ethereum spot ETF, and they want to see in-kind redemption in the Bitcoin ones, which was never approved at the very beginning. Do you think this is it? The tone is that they're pausing and want to make pragmatic decisions, I think, once Atkins is in and they get a clear strategy. Do you think that that's fair and that this is not some sort of Gary Gensler-esque outright rejection?
No, I think that, listen, they made the obvious moves. Staking is sort of the last bastion, if you will, of regulatory clarity. And I think that this is just a function of, we want to get the chairman on board, in place, and figure out the long-term strategy. And there's probably some mechanics involved where they want, basically his blessing. But I think it's inevitable because the market's demanding it. People want staking. They want yield, and they want it with Ethereum. Listen, I'm someone, and I get a lot of people mad at me when I say this, but Ethereum, I know you brought it up and how it's acted, but it blew the greatest regulatory advantage that I've ever witnessed in my lifetime. I'm just sorry. It's the truth. If you go back to June 14th, 2018, and Hinman declaring Ethereum not a security, that regulatory advantage, especially when others were considered, securities. But I think Ethereum is long-term is going to survive, of course, although I do believe XRP is going to flip it.
I agree. I think it's going to flip it. I think these blockchains will survive. I think they'll be privatized. I think it makes sense. If I was a company like Disney, I'd find a chain like Solana and I'd buy the majority of the market and I'd control it for my own purposes. And I'd be the 800-pound gorilla on the, I would do the whole market, the efficiency that running on a coin. Brad Garlinghouse is about to prove it, and we're going to see it live, because when you run an exchange on the back of the rails that he's about to run it on versus a traditional exchange, there is no competition. You are the single player in the market that can do what you can do. And I think that companies are going to start adopting blockchains. And I think some of these chains, are going to serve great purposes in the private sector. They're just not, their utility hasn't been defined. Their utility has to be defined in my estimation for them to compete with Bitcoin or compete with XRP now that it has found utility. You just have to have that. There's got to be a reason for people to adopt and use it, I think, from this day going forward. And why? Well, because the traditional markets are creating the same roller coasters, and they're going to create the same amusement parks on the traditional side. It's just going to be paper that you're trading versus the actual asset. So those markets will mirror each other. They're the same coin, just different sides of the coin. They have to mirror each other. And the like-kind redemption piece of it does, I think there's a little mechanics issue in that, because
That's not that easy.
That's not easy. Listen, you know how hard it's going to be, and how much stress it's going to put on the spot market to change it
And
to essentially.
custodians. Yeah, I mean, and structurally, I don't know if even the custodians are ready for that.
Bingo.
So,
Yeah. So it's one of those things. Like, I think that those things are getting delayed because we don't quite frankly know how to do it, and we're still fleshing that out. I do think stable coins make if the government can create a stable coin package that is very, very clear in terms of the on ramps and the off ramps, because if they control the on ramps and the off ramps, then they don't care what's built on the other side of those roads. We have freedom to innovate, build the biggest amusement park that we can. It'll end up like Las Vegas, but they'll be able to see all of everybody that goes in and out on that stablecoin legislation and on that central on ramp and off ramp. That's kind of where I think they're trying to figure out how do we really regulate this and keep it from being something that's negative to the world, and at the same time not
we're definitely getting
stifle growth. Yeah.
I mean, we're getting stablecoin legislation for sure. I would say market structure we even get by August, based on what I'm hearing. I mean, Tim Scott's saying that, but from everyone I talk to anywhere close, that's actually a Trump priority and a straight from the administration to at least get those things. I mean, and meanwhile, I know, Andrew, you're about to jump in. I'm just kind of watching the market. We were just above 86,000, 85,993 here, but you can feel that the moment there's SPY up slightly, Q's up slightly. You can feel right now that the moment there's any optimism in markets, Bitcoin starts to push.
Yeah.
Like, I don't, and then you get, by the way, then you get like a Truth Social post that says like, we're semiconductors 90% today, but not tomorrow. And then maybe next week, 75%, but also, a lot of credit, though, I do have to say, a lot of credit. If the NVIDIA news that they're coming back to build their full supercomputers in the United States, 500 billion, if that's a result of tariffs, job well done. Because that's going to be huge when that actually happens. So
hashtag 4D chess.
Yeah. I mean, I think I think there's positives and negatives to how it's being done. But Bitcoin right back up here at 86,000. It's like none of this ever happened. Now we need to see 100. It's get really
Wait till interest rates and quantitative easing kick in too, and then you add tax cuts to that. That liquidity's got to go somewhere.
Yeah, and you look at that liquidity cycle, and Bitcoin is just, as always, trails that M2 increase, and it's happening all over the world. Go ahead, Andrew.
Yeah, we're looking at right now, S&P up, let's call it about 0.5%, and then Bitcoin's up 1.75%, right? So 1.75. So again, there's that correlation where Bitcoin is higher, exponentially, versus the markets. Now, again, you get the downside to that too, but there's opportunity with that volatility, extraordinary opportunity with volatility. And again, I go back to Jeff Park. He's been on this kick for the better part of 9 months about volatility equals opportunity. There's opportunity in MicroStrategy's price. There's opportunity in Bitcoin volatility. There's opportunity in Bitcoin options. There's opportunity everywhere if you're able to come to terms with some of the gamification associated with markets, because that is a reality now. That is a reality. Even in traditional markets, there's gamification associated with it. So can you then take that reality and benefit from it in a meaningful way? And again, it's part of my job description to pivot to tools that can allow you to do that. And, Arch Public and our algorithms associated with the gyrations of Bitcoin, and now with the gyrations of XRP, just extraordinary tools that allow you to do that. So,
I just wish there was a product you're talking about where a moron like me, and I am a moron when it comes to tech, and anybody that knows me knows that I'm not exaggerating, could basically get an opportunity to capitalize on that volatility.
Well, it's interesting that you say that, John, because as now a user of our algorithms, both our XRP algo as well as our Bitcoin algo, the opportunity to set up processes where you're not only harvesting volatility to accumulate more Bitcoin, accumulate more XRP, but there's also cash yield that's being generated based on the fact that those algos have a long bias, right? So you're accumulating more and you're generating cash yield. Then that cash yield can be turned around and moved into the asset of your choice. Because we're launching an XRP algo today, we now have 4 assets across our crypto portfolio: Bitcoin, Ethereum, Solana, and now XRP. That's available for free to everyone. So everyone listening,
really hard on Ethereum since it never goes up.
Yeah, exactly. Well,
we don't get a whole lot of product to DCA.
You got to really catch
those.
Well. You got to be really. That's got to be a hell of an algorithm to catch that 5 minutes.
Well, again, our algorithms are algorithms inside of algorithms, right? So if you have a significant Ethereum position and you want to scale out over time, over the next 3 to 6 months, our algorithm will do that in an automated way on your behalf. John told us a story when we started working with him about when XRP hit $3, and he said, $3 is a big number. It's a number that I've had in my head, and I wanted to lighten up just a little bit at $3. He said, but $3 happened while I was asleep, and it only happened for about 9 minutes, so I couldn't do it. Therein is the reality associated with our products, that when Bitcoin is at 76 or 77, or Solana is up at 134, and you're doing something else, our algorithm is making choices and decisions for you. So just truly extraordinary tech on tech, as Tillman loves to hear me say. And, there you go. Take a look at, what an XRP algo does for you, right? You're accumulating with a long bias. So there's sells that are happening at the bottom of red candles. There are, purchases happening at the bottom of red candles.
I was like, really?
Yeah. Well, that'd be bad.
That's not what it says.
And there are purchases, happening at the bottom of red candles, and sales happening at the top of green candles. So you can't do that as a human. See that huge green candle there that was probably associated with some sort of tweet somewhere,
that's why.
right? Like, 99.9% of traders can't sell at the top because they think it's going higher. Like, this thing's on a rocket ship. God candle, it's going higher. I can't sell. Well, you lighten up just a little bit. You make a reasonable decision, but it's being made for you. So,
well, the truth is that you always in volatile markets, you want as many entry and exit points as you can manage. Truthfully, if you look at like a hedge fund or any company that is spending a lot of money in the markets, they don't have the choice of going in and pushing, smash buy and lumping some into their positions. Why? Well, because they move markets. They're playing with that much money. But what they really don't want is the price exposure at a single entry point. They want price exposure over a long period of time. And the longer the period of time, the better. Why? Because you're getting an average price that is truly reflective of the current value of the market. You've taken the anomaly situation and you've reduced that risk. And so, to John's point, to Andrew's point, when you're playing with volatility, you want to have a strategy that executes when that volatility presents opportunities. And you can't do that as a human being unless you can stay up 24/7 and sit in front of your computer 24/7. And so automation is something that has been used by every big institution. It's been used by every major fund for decades. This is just the first time retail can use it. And to Andrew's point, it's free. And I could sit here and talk about it for 8 hours, and we all could. But nothing is like seeing it, and seeing is believing it. And so come click on our XRP algo if you're an XRP guy or a Bitcoin guy, and try it for free and talk to us. We'll show you how to use it. But our thesis is that we don't meet anyone that says, oh, I wish I owned less Bitcoin, or I wish I owned less XRP. It's always the opposite.
Met people who said that.
Not
Bitcoin, but
it depends on when you ask them, Scott. Not
here.
now. Not now. You're not.
Okay.
Hey guys, let me make something clear too. I wouldn't even be talking if something was going to be trying to shield something to the XRP community. I wouldn't be involved. If it was like give up your XRP for some yield and all that, I wouldn't be involved. And in fact, I didn't get involved other than an XRP holder who was a lifelong Democrat who supported me when I was running against Warren, Todd. We were talking, and when I learned that this is sort of like retail gets to participate in a way that only professionals, it's always the hedge funds and the big boys, they make money. And it's always retail who gets excluded out. It's like the credit investor rule, right? We're going to exclude 88% of the American population from owning private equity. Yeah, that's upward mobility, right? But here we have an ability where someone like me can say, you know what? I'm participating and I don't have to give up my shit. I don't have to give up my bag. I don't even have to participate. I can do it free. And then I'll let myself be convinced. After it's free. If I want to participate higher, then that's something.
I see such dumb comments, and listen, I get that everybody thinks anytime you promote something and anywhere in crypto, it must be a scam, but your assets are not controlled by Arch Public. Just to be clear, there's no risk of I just see it in the comments. Oh, we're sending you the No.
By the way, an exhibit A as to institutional tools. What did Ripple just buy? What did Ripple just buy? A massive broker dealer for billions of dollars. What happens at that institutional level? Those institutions, 80% of their trades are done algorithmically. They're doing that stuff algorithmically. So Ripple just paid $1.25 billion for that company to be able to have access to that type of stuff. We're giving you access to it for free. We're giving you access to that type of technology that's that valuable in traditional markets. We're giving it to you for free.
I just don't think people understand. You can set the parameters.
This is all user-based.
There's no way that you lose all your money doing this unless you decide that you want to take the wildest gambles, which the algo is never going to want to do in the first place. It's just wild. People's assumptions that
Listen,
Let
there's
me
always,
address some of them
actually-
real quick, because we've gone to great lengths to provide as transparent and a business model as you can provide. You put your money on a major exchange, Gemini, Kraken, Coinbase. Your money is in their hands. We don't ever have access to your funds. So you trade in the exact same account that you have a brokerage account with now. Secondly, the automation or the algos that we provide run through TradingView. So you can pull historical results through TradingView. You don't even have to take our word for the historical performance of the algos. You can pull the results straight from TradingView. We'll show you how to set it up, and you can run it for free for as long as you want to run it for. So again, there's no risk in you trying it. If you're a naysayer, I urge you to try it, because I would love to hear whether you've been convinced or not after you've used the product.
And we're careful to say certain things, because you can't guarantee anything. But there is a box when you're setting up your algorithm on TradingView that says never sell under your cost basis. Now I don't know what that means to you, but when you're running an algo and you're making purchases associated with an asset, and that box is ticked and says never sell under your cost basis, I don't know. That sounds like a pretty good box to tick associated with the algorithms, giving you extraordinary performance, and you're not taking losing trades is kind of the point.
You can not try it. You can hate.
listen, there's always going to be people
take
out there.
$100 and
You can't please everyone. The bottom line is the democratization of investing.
Yes.
That's where my heart is. Okay,
Yep.
someone who escaped poverty, who's tired of the rich people, the wealthy, the people that made money on Wall Street off this tariff shit. You know that there were people connected to it. I don't care what you say or anyone says, but being able to give a tool to a regular Joe like me, okay, and others,
and me.
right, to participate. Again, nothing's being pushed on anyone. I would not participate in anything like that. All I know is that if I can participate with these kind of tools going into the future with these algos and build wealth, and that kind of tool is brought down to regular people, mechanics, nurses, plumbers, and they get to participate in a way of building wealth where they've been excluded all their life. That is where my heart is. And that's why I hopped on here, and that's why I started using it myself. And again, free, so you don't have to buy anything.
Yeah, you don't have to do anything. And to your point, I just want to say, it works exceptionally well for the everyday person who just wants to gain exposure. But actually, the smartest people I know also want to use these things because they know that they can't manually do it, and that it's going to do exactly what they would ideally want to do if they could be there 24/7, 365 with no emotion. It's so obvious.
If you remove emotion from markets, and if I ask you right now, are you a buyer at 65,000?
Yeah.
Well, yeah, I am. Well, how much do you want to allocate at 65,000? $5,000. I can layer 100 if-then scenarios in this software to where I can say, if the market gives me this, I want this to happen. And then you set it and forget it. So when those events take place, you're removed emotionally from having to do the manual process when the market is bleeding, or it's all being done. And so it's a way, if I told you, hey, the only way to get fit is to go to the gym, and you can't go to the gym for 48 hours straight and be fit. You have to go to the gym for an hour a day for 48 days. You have to be consistent. You have to be available. You have to dedicate time. That's the same thing with taking positions in anything. It takes a lot of time. It takes a lot of thought. It takes a lot of execution risk. This takes all of that away and allows you to sit there when there's no emotion and say, okay, over the next year, what do I want to accomplish with my crypto bags? What do I want to accomplish with each one? And set up an infinite number of if-then scenarios or instances to accomplish that when the market presents those opportunities. And it's out of sight, out of mind, and you look back on it and it feels like magic. It'd be like if you got to go to the gym every day for that hour in your sleep, and you just woke up on day 48 and you were healthier, more fit, and in shape because it's been done for you, essentially. And that's the closest analogy I can give you.
Yeah. And I know we go ahead, Andrew, last thoughts, because we got to run in a second.
Last thought, you need to shave your head and grow a beard. That's my last.
All right. I'll try. It's archpublic.com. You can see it down in the bottom for those of you looking. And I mean, listen, I can just tell you that I've been through every up and down of participating and promoting anything over all the years. And everybody knows that, like, I had the bulk of my net worth on Voyager. And they were my first sponsor in 2019. Before any of this, I'm very cautious about how I approach it. You use this at your own discretion. There's nothing controversial here, right? You use it at your own discretion. And I can tell you that I hear nothing negative, and thousands of you have signed up.
Yep.
Quite literally thousands of people that I talk to and we know have signed up for this free algorithm and are using it, and I haven't heard a single complaint. And I would before anyone else, right?
Yeah,
so,
that's right.
You know, you wouldn't have John and I sitting here if there was any way that wasn't the case. All right, guys, we do have to run. John, man, thank you so much for everything you do.
Thanks
for showing up. Absolutely. Always incredible to have you here. Tillman, Andrew, you guys are all right.
All right, man.
Like
See you.
All right, everybody. Thank you very much. We'll see you tomorrow. Bye.
Let's go.